What's up, everybody? Nate here. And one of the most well-known economists in the world just gave his opinion on the economy. And he said to steer clear of assets like bonds and treasury notes and completely avoid debt and instead start saving cash. Ray Dalio is one of the founders of Bridgewater Associates, an investment firm that manages around $235 billion in assets. And it sounds kind of crazy, right? Start holding on and saving cash in this economy. That must be completely insane because we still have inflation that is going up month after month, which means the value of your dollars is getting a lot less. But according to Ray Dalio, this is a much better situation for investors and consumers than holding on to debt and assets like bonds right now. So Ray Dalio believes that investors and consumers are a lot better off holding on and saving cash right now than they would be if they were going to go out and buy bonds, simply because of one major thing, and that is Federal Reserve interest rates. Now, Federal Reserve interest rates have gone up pretty exponentially over the last year or so, up from around 0% now to over 5.5%. That has made it really difficult for Americans and investors to do a lot of things, particularly borrow money. When your interest rates in a country are very high from a central bank, that means that banks and other financial institutions are going to have a harder time getting that money because banks get their money from the Federal Reserve and the Treasury Department. So if banks have a hard time getting their money, they then trickle those costs down to the consumer or the investor or anybody else that wants to borrow money. So immediately this is harder for people to spend money because now they can't go out and get things like a mortgage as easily, and they can't get things like an auto loan. Now, initially, this was meant to battle inflation, right? So the Federal Reserve wants to raise their interest rates so that way it's harder for Americans to get that access to money, thus demand will go down. And if demand starts going down, then the thought is prices will also start to drop too. But this also has one built-in benefit for people who want to save money. A financial 101 here: when you take your money to the bank and you put it into a savings account, you're told typically not to keep too much money in a savings account because it's basically dead just sitting there. It's not really doing anything for you, and it's simply just losing value every single day that it sits there because of inflation. But because Federal Reserve interest rates have been going up, what banks are doing is sort of incentivizing people to start using banks a lot more. So what they want people to do is put their money into savings accounts. And the reason for this is because it's harder for them to get money from the Federal Reserve. So in order for them to get a lot more money, they want to incentivize you to use the bank, and that comes with a higher interest rate. Typically, you're lucky if you're going to see a 0.5% or a 1% savings rate at a bank. A 1% savings rate would actually be pretty good. Most banks are even a quarter of that. So you take your money and you're basically only making a couple cents for every $100 that you have there. But now banks are introducing higher yield savings accounts. We even actually saw Apple do this just a few months ago. They want to incentivize people to start using their savings accounts so that way they can go out and spend a lot more money. This means that you can get a higher return on your money for just putting it in a savings account, and you don't even have to invest it. The reason that Ray Dalio believes this might be a safer play right now than, say, going out and investing in treasury bonds or corporate bonds is that the yields for your treasury bonds are starting to fluctuate pretty wildly depending on what is going on with the government's debt and inflation. The 30-year treasury yield right now is at around 5% for investors, while a good chunk of high-yield savings accounts are around 3 to maybe 4 and even 5% as well. So the difference here is that when you're investing in a bond and when you're investing in other types of assets, well, they are going to fluctuate based on supply and demand. So if you have some downward pressure on markets and there needs to be a lot more liquidity and businesses and corporations need a lot more money right away, then they're going to sell off a lot of those bonds. And yeah, that means you're going to have a higher yield, but it also means that it's going to create a lot more debt for the United States government. So basically what you have then is prices starting to go down. And once again, when you have a lot of supply but not enough demand, then prices go down. And what that creates is a lot of inflationary pressure. What you have now when you have a big sell-off in bonds is borrowing costs going way up because now the federal government doesn't have as much money to use when they have a lot of people that are buying those bonds. They have to make do with the people who are purchasing, which means they drive up the cost to actually borrow money. So it's a lot more costly for everybody to do so. And what Ray Dalio is basically explaining here is something that has been going on in the United States for a while, and it's called a credit crunch. So basically when you have really high interest rates in a country, that's going to make it a lot more difficult for banks and everybody to get money, right? So what the banks do is they raise their interest rates, and overall the banks are still making out here because the higher those interest rates go, the more money that they're going to be making here, right? Because that also links to prices going up for assets or just consumer goods and services like buying a house or buying a car, right? So now those banks are getting a big payday because everybody is paying a lot more in interest. But what it's bad for is the average consumer and investor. Now, it's important to mention here that Ray Dalio does not believe saving money is going to continue to be the solution here, right? He thinks that in the short term, saving money might be better than going out and buying certain bonds like treasury notes and some corporate bonds, right? Now, this is not a blanket solution for everything. There's obviously going to be a lot of things at play here. So at the end of the day, you have to make the best decision for you and your goals and of course your money, right? Because just because Ray Dalio says it doesn't mean that it is going to be perfect for your financial situation. Not only that, but saving money just in general for too long of a time can eat away at the value of that money, and you're just going to be making your bank richer by putting a lot more money in there. So there has to be some sort of balance. At the end of the day, you can't just throw every single dollar and every extra dollar that you have in a savings account because we do still have really high inflation. Inflation actually was at 3.7%, going up for the third straight month in a row in August, which means that even though the Federal Reserve has been raising their interest rates, people still have access to money and people are still able to get money, which means we could continue to see a more restrictive economy and higher interest rates. And that is going to make asset prices basically go pretty wild. What you need to do is kind of keep all of that in consideration, right? Because you don't want to just have all of your money sitting in a savings account. You have to also start gaining value on your money because inflation is so high. And one of the only ways that you can do that is by investing your money. Now, I'm not going to sit here and tell you exactly what to invest in because, like I said before, it depends on your own goals and it depends on how much risk you're willing to take on. The fact of the matter here is that if you don't invest your money and you simply just shove all of it in a savings account, then it's going to lose value over time. And that's not something that you can afford, especially in this economy. Ray Dalio believes that the issue of treasury bonds isn't really going away anytime soon, especially when you have a country where most of its capital is tied up in debt. And the United States government has around $33 trillion worth of national debt. And when you have that much debt, well, this problem just continues to accelerate and get bigger and bigger because we've talked a lot about on this channel how governments make money and how the United States is able to spend money so rapidly. Well, the only reason it's able to do that is because it is the reserve currency of the world. So other nations around the world want our money. So countries like China and Japan and the UK and all of these other nations are holding US dollars. They have a large amount of US dollars because the United States economy is seen as really stable along with our military, and just our country in general is seen as really, really stable. So people want to use our money because they know that it's going to continue to have that same value and reliability over some other types of currency. So we are the reserve currency of the world. And what that means is that other countries are willing to loan us money because they want our money, right? So that has fueled the United States to spend a ton of cash all the time. The consequences of this are grave if we're not the reserve currency of the world, but as long as you stay the reserve currency of the world, well, this doesn't really mean much on a national stage. But here at home, it definitely has some pretty severe consequences, and that is more and more growing debt. The United States government doesn't really have any other way to make money other than through taxes, printing money, and borrowing money. Well, other countries are hurting right now, so they're not going to loan us as much money. Nobody wants more taxes, and we can't just continue to print more money because the Federal Reserve is already dealing with really high inflation. So what is the only thing left to do? Well, we can issue treasury bonds. What that means is that individuals are going to loan money to the United States government that they can use for basically whatever they want, and then the United States government is going to repay them back with interest over a set period of time. Well, what this does though is incentivize more government spending because now you have a ton more people who are willing to just give the government back a lot of that cash. So now the government can continue to go out and just spend and spend and spend. Ray Dalio is afraid that this could eventually cause the United States to decline financially because it just has way too much debt. Now, to be clear, we're not quite there yet, but like I said before, Ray Dalio believes that the United States economy and our financial system is on the decline, but that doesn't mean that you have to decline. He believes that there are ways for individuals to actually turn this negative into a positive, and that is to to really kind of consider your asset options here. You want to be investing in technologies and assets that are going to continue to appreciate in value and give you a lot of cash flow. So these are companies or these are real estate properties that are in areas that people want to be in, or the stock of a company that has a lot of growing technology like Google, Amazon, and Microsoft. These are companies that are at the forefront of retail and AI right now, and those are booming industries and probably will continue to be for the foreseeable future. And just to be clear, those were examples. I am not telling you to go out and buy Amazon stock or Microsoft stock or Google stock, right? Always do your own due diligence when investing and never listen to random people like me on the internet. All investing comes with risks, and you might even lose money even if you do everything right. But the bottom line here is that you want to try to limit your risk as much as possible and maximize the opportunities for profits down the road. And the only way to do that is to diversify, buying different types of stocks and different types of real estate properties and different types of assets all together. So that way, if one sector of your investment portfolio ends up going down, then you have another sector that you can lean on that is actually bringing in profits. The other is actually looking at companies or real estate properties or anything else that is going to continue to be valuable and continue to go up in appreciation or give you cash flow because you need that cash today so you can go out and continue to invest and beat inflation. Last piece of this whole puzzle from Ray Dalio is that he talks a lot about prices going way up and that investors are going to be looking at a lot of investments right now and they're going to see record profits and record revenue. But what you have to understand here is that a lot of those record profits and record revenue is only that high because inflation was really high too. So because of course, as people had more money in 2021 because of the Great Resignation and people getting raises at their jobs and the United States government printing trillions of dollars in stimulus, yeah, they were able to go out and buy a lot more and they saved a lot and they're still buying more. And prices just continuing to go up and up and up is going to, of course, lead to record profits, but that does not necessarily mean that the market is healthy. Everything is just a lot more expensive now. So instead of just looking at, oh, this company had record profits, they're going to continue to have record profits, you have to look at the fundamentals of the company. How many costs do they have for all the dollars that they're bringing in? And what is their innovations? Are they actually an innovative company, or are they just another brand that happened to do really well over the last couple of years or so because the economy was in this really weird boom? That's going to help you to understand what you're buying, and that gives you the education to then apply this to a lot of other investments that you have. If you want to learn more about this, we're breaking down the top business and financial news on this channel 7 days a week. And if you're ready for more, I've got another video ready for you right there. So be sure to check that out before you go. And if you want to make sure you never miss an upload, make sure to hit that subscribe button below. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.